Hey everybody, it's Pete. Good morning. Welcome to a first episode of today's best stock picks for January 4th, 2021. Welcome. Thank you so much for being here. Hopefully you had a nice, safe holiday. Today we're going to talk about a few stocks that are kind of back in play that have not been in play for a while. They were on fire, a little bit of sector rotation, a little bit of staying away from the market. And now they're starting to get some news leading up to some more significant news later in the week. I'll explain that in a second. But then we're going to also talk about some trades that set up last week that have to pause maybe 1 or 2 days, Monday and Tuesday, leading to the next swing trade. And we're going to talk about a swing trade, two swing trades actually that we had from last week. One is Disney and one is JMIA. Both of them still valid. Neither one of them hit a profit target yet. So there's a lot to unpack today. Hopefully you did some trading planning for 2021. For everybody, myself included, there's always a higher level that you can get to. So I did a lot of that over the last 2 weeks, as I do every single year, reviewing what I feel like I did well, how I feel like I can improve. But here's the number one thing. The single biggest thing for you to flawlessly review and review raw, uncensored is, did you trade well? It's one thing to have a strategy. It's another thing to have all the beautiful charts and 5 monitors and everything else you can think of and call yourself a trader. However, the number one thing to review is, did you trade your strategy well? You might have a strategy, but did you actually follow it? That's one of the biggest things we talk about, especially with newer traders, is having a strategy and trading that strategy flawlessly is not the same thing. So give you a little insight. That's really one of my biggest things is, you have a bunch of stuff down on your legal pad at the end of every day, heading into the next day. You have your game plan. Did you actually trade your game plan for the week? Did you actually trade your game plan for the day? I'm willing to bet that you more often than not had this beautifully, perfectly laid out game plan for both day trades and swing trades. And then for some reason, you didn't follow it exactly as you wrote it out. I'm pretty sure that pre-market, if you know what you're doing, if you have a strategy, if you infstand what you're doing, I think you're probably much better at it than you believe. But it's that last part of actually not letting last minute influences stop you, not letting one candlestick on a daily chart or a 5-minute chart shake you out of a good trade, and sticking with what you said you were going to do. So I think that's one of the biggest things I'm personally going to be a little bit more ruthless with for myself this year. And I challenge you to do the same thing. I challenge you to look in the mirror and say, okay, am I actually acting like a trader, or am I just placing orders hoping for results? There's a big difference between the two. And a part of that is actually accepting the risk and the reward on both sides of the trade. Real traders don't cry over getting stopped out. Real traders don't cry about, I added to the position, came back, and I didn't make as much. Sure, you can aspire to want more, but don't start looking for reasons about what's holding you back. That's a deep rabbit hole that you don't want to get sucked into, because sometimes price action just happens. It's very rare. We get a few opportunities like QS a couple of weeks ago where you get in and it just flies in your favor and does exactly what you want and gives you this big, huge windfall profit. That's beautiful, but that doesn't happen often. And you certainly can't bank on only finding those trades that will double in 5 days. It's a glorious time to be a trader, but that's not really what we're shooting for. We're shooting for good, consistent follow through with acceptable profit potential for the risk that we need to take for that trade. So just want to make sure, again, as we do every day in our game plan meeting, setting up the right mindset to go into the market. And it's more about flawless trading of your strategy than it is to go out hunting for these stocks that will double in 5 days. That's great. It's awesome. I love it. We had it, but that's not what we're looking for. We're looking for continuous account growth without losing sleep. So we're going to get into some ideas. We're going to start out with a little bit of news. Oh, by the way, if you find these videos helpful and you have any questions about some of the stock picks specifically, first, give us a like if you can, subscribe to the channel, and don't hesitate to leave a comment below the video. I'd appreciate it. So let's head on over to the screen. First, we're going to talk about news on XPEV, XPENG, and NIO. So again, we've talked about that this morning, focusing on stocks that have attention, and those are the ones that consistently get good follow through. Now, these are news stories. There's a NIO day this week and whatnot. But I want to talk about the tape and the order flow in both of these stocks heading into the day. So we're going to take a look at NIO and heading into the week, right? NIO's tape has very similar to chart pattern to what Tesla did at the end of August, where September and October kind of went into this phantom zone where not much was going on. And you can see that NIO is kind of doing the same thing and was doing the same thing. 2 weeks ago, we had this really nice bullish run and we said, okay, this is great. Let's manage our expectation because there is not order flow. The tape is choppy prior to that. But then we kind of retraced right back up to that level and we're trading higher again. And we'll take a look, very similar to what we're seeing in XPEV, but NIO is actually a little bit stronger. XPEV as of right now is up 5.65% pre-market. A lot of these stocks, or both of these stocks, and the sector, including BLNK, what we're going to take a look at in a minute, have attention on them today. However, here's the point that I want to make. We are not trading with existing order flow. We're not hopping on the back of an existing 2 or 3 week or monthly run as we did here from November through December. That's not going on right now. We need the stocks to wake up a little bit before we start to trade size, before we start to expand what we believe could be the profit potential. So the catalyst, the news story, the good expectations are the first reason for us to start taking a look at them again. But because the tape is choppy, because there's no order flow there right now, this is the initial phase of getting involved in these stocks again. So it'll be lower share size if you are looking for a longer term swing, waiting for the order flow to say, okay, I'm here for more than just one day. This is a real catalyst. We're going to do what we call hold the bid, meaning a push and a pause. And that's where we start to get involved a little bit more. From a day trading perspective, we have been day trading them. They've been giving us some good one-day opportunities, but have been very careful and clear not to say that we are swing trading them. We have not. I have not. And I have not been talking about them as swing trades because the order flow is choppy, because the tape is choppy. Today could be the start of something bigger. But again, we need to let the market show that it's going to push and then hold that bid for the next trade. I also, interesting, besides XPEV and NIO, BLNK is another one that's kind of in that same area. So my attention on one sector and industry group sympathy, looking for some follow through. But here, BLNK is one of the ideas I want to talk about, but I want to talk about BTBT. And this is both of those stocks. BLNK not so much because the industry is a little more in play right now. These are the kind of stocks that I talked about in our video this morning in reference to if you are swing trading and finding it challenging to see follow through, you're getting stopped out too much. You're not getting clean movement. It's not moving in your favor from one day to the next. We're not seeing what we call well bid, which is higher highs and higher lows. You're probably chasing stocks like this where you run a scanner on a $5 stock, the stock explodes to 24, and that's the only time in the last 2 years that the stock has had any kind of attention. You're not getting follow through because you're chasing this price in a stock that does not have smart money attention on a consistent basis. These are the kind of trades that are exciting. They look awesome when you're like, oh my gosh, the stock went from $6 to 24 in 4 days. I need to find the next one of these, or I'm going to get involved in this immediately. And then this stock melts all the way back down to 8. And you're left wondering why that happened. And I think JMIA is a good example over here where that happened. It exploded from $5 up to 20 and change. And then you can see it drifted all the way back down to 5 before the smart money said, okay, now we're going to start to push and pause and give it a little bit more daily attention. So again, that first move off of penny stocks is very challenging. So if you're finding yourself trading those kind of stocks and you're frustrated, that's why you need a little bit more smart money consistency in that stock. A couple of other stocks that are in today's watch list, WDC and Micron, obviously two much more popular stocks and market leaders, really good price action Thursday and Friday. We're looking for some follow through today. Now, again, this is 2 days after the first optimal entry. So if you're buying these new highs, it would not be with full share size. I'll give you, again, this stock, for example, up $6.50 from Thursday's low, if not a little bit more than that, $7 over Thursday's low. So it's past the optimal entry, which means you can still get long, but you're not going to be getting long with full share size up there. Baidu is another one. Some really good news in Baidu recently, but here's the thing, a nice push and a pause. Now, think about managing this trade in Baidu. Baidu is in a $10 trading range, $10. And now we just had a really good move on Thursday into a bearish U-turn on Friday. So this is a stock that you can't trade to the exact candlestick, because you're going to end up getting stopped out on a good idea, because that's what the stock normally does. So if we get involved in this, we have to anticipate a wider, whippier type price action and then take the appropriate share size for that kind of a trade. But I do love the breakout here. Thursday was a little bit of profit taking. MasterCard and Visa were very strong over the summertime. You can see here this run that they had in the June, mostly July through August. And now we kind of bounced back up to those levels. We went well bid now, 1, 2, 3, 4, 5 days in a row. And at the breakout level, right? We got above here and came back in quickly, like a lot of stocks did. But this is really the level, this 256, 258 level. And Visa, you can see very similar part, but actually punched through there already. So what I'm looking for now is I'm looking for MasterCard to pause for a couple of days. Visa actually got up to the breakout level and paused. So we're going to be looking to execute a trade or start a new swing trade in Visa outside of this range. So again, two stocks that had really good bullish price action, pausing for a couple of days. Again, whether you want to wait a day or two at those resistance levels, up to you. But we're looking for a pause and then a new push into new highs. I just mentioned JMIA. I like this one. This was a swing trade, and Disney was a swing trade initiated last week. This was the optimal entry, have not been stopped out, really has not moved in our favor yet either. So we're kind of just in that phantom zone right now. And Disney, the target on Disney was 186, and that target is still valid there as well. We're going to finish up with LYFT, LYFT. And you can see here it keeps banging its head at 50. Now, a lot of people will say that we just consolidated there on Friday, and that's the entry signal. It is and it isn't. I want to point this out. It's also in a 2-week trading range. So the fact that it's a 2-week trading range is more important than getting an optimal entry signal. So really the trade here is a well bid close above 50 and then buying tomorrow. So if this stock breaks out, closes above 50, closes near the highs, then we would initiate a new trade tomorrow above today's high. So a lot to unpack here. The futures are up strong again, although they're pulling back slightly. I just want to say, let's set big goals this year. Let's be on the same side this year. Everything we do through positivity and learning from each other. That's really the big thing. We get a lot of comments that I love in general, but sometimes we get a few people in there that are posting adversarial type stuff. Let's not do that this year. Let's really try and help each other through the comments, through the videos, through the boot camp. If you happen to be in there with us, trading is hard enough. Let's build a community both here in social media as well as in the boot camp, where we're all trying to help each other and try and make each other better. That's really my goal for this year. And again, go back to the beginning of that video. Ask yourself if you're trading flawlessly, because I'm willing to bet you're doing a good job setting things up. Take that last step and develop good habits of following your plan flawlessly, executing that plan flawlessly. And I think you'll be pleasantly surprised with how things turn out. So if you have any questions about any of these stock picks, let me know, and I'll see you on the other side. Have a great day.